I'm Chief Investment Officer of the company. I've got about closing in on about 20 years of experience in commercial real estate, office, retail, multifamily, student housing, about $3 billion in total transaction volume over my career. Spent my first 10 years in the Washington, D.C. metro area, more focused on publicly traded assets, which is I used to work for a publicly traded REIT, and then moved into the private sector over the last decade, doing student housing, multifamily. I was formerly the Chief Investment Officer for a multifamily that invested sort of in the Central Texas region, and now here with Lynn supporting the team for its next stage into institutional growth. Now we're going to talk about some of the themes, the major things happening in the Texas region, right, in this actually in the Austin, San Antonio region, and the impacts and how that's impacting our strategy and our approach to investing for the long run. We provide a series of avenues, from fixed income to real assets, which just means that you own the assets directly under your own title, to private equity, which means we're investing together as a group into larger assets, all the way to tax-advantaged vehicles, which is when we have a lot of wealth that we've generated, right, one investment to another, or when it's time to start planning to move it from one generation to another. We've designed the company effectively to produce products that actually fit these needs so that as we move through different points in our lives, we get to use different products that get us further along the journey, right? So we don't derail, we just switch tracks. So that's the idea of how we're approaching investments for the future. Now, in addition to that, obviously the company is a much broader firm. I've just spoken about the investment side of the firm, but we also have the services side, which includes our brokerage services, right, which allows us to buy and sell, transact. It keeps us up to date on the market, which again becomes our investors' benefit because you're up to date on the market then, anytime you talk to one of our agents. And at the same time, investing is great, but it's not great when you have to be the one responsible for taking the phone calls when things go wrong, right? Tenants, whether it's commercial leases, et cetera, that kind of thing, or even residential tenants, you don't want to take those calls. That's why property management's helpful. It adds that service. So these are the additional supporting services really that are designed to help you thrive as you move through the journey of life. Now, the idea of investing, we believe that investing together actually makes us stronger. So I'm presenting it in a couple of different ways where if one was to go out and invest on their own, we call it the DIY investor, the do-it-yourself investor. Typically, all you have is the available resources and the connections that you have to source deals and to evaluate things in your mind and make a decision. Do I trust, number one, the sponsor, and number two, do I trust this deal, that this deal will perform, right? It's a very limited amount of information that we have to operate on. So we are then limited to picking deals just based on what's been given to us. Now, there are other investors who say, well, I acknowledge that I don't have that much domain expertise, so what I'm going to do is I'm going to focus on indexing. I'm going to limit my involvement in sort of decision making. I'm going to take the broader market. I'll invest in REITs. I'll invest in ETFs, whatever it is. That's how I'm going to get my real estate exposure, right? Now, that's great, but the only limitation of that is you do not get better than market returns. So the DIY investor is seeking out performance, but with asymmetric limited information. The indexer has no lack of information because there's really nothing else to go around but public market information, but then you forego all the top returns. So the way Real International approaches this is that we bring a couple things to the table. One, we are definitely targeting outperformance. This is how we approach it. But we also try to mitigate things, like by doing larger deals and deals of scale, we get to blend down our fees, lower transaction costs as a percentage of the total deal. So you get that benefit as well. From development to investments, all of the different products, there is a broad spectrum of asset diversification involved that we can bring to the table. And then there's also portfolio flexibility and optionality, like I just mentioned with the rainbow, different asset classes. You can jump from fixed income to private equity to other things depending on financial needs or financial goals and plans for life. Then we also bring specialized training. You're going to hear from some of our specialists in various areas, investments, asset management, property management, brokerage. You'll hear from that. And you'll start to hopefully get a sense for what we can bring to the table from that perspective. Then finally, we are active operators. So we have financial oversight on anything we touch, whether we're a limited partner making an investment in a deal or for the most part now moving to general partner style deals. We definitely are very actively focused on our investments. The other aspect that I wanted to share with you, because this was unique even as I joined the company back in October, this is something I learned at the top, but I'll start with some of the unique factors of how Real International creates values is how we source deals. Decade worth of relationships with some of the key players here in Austin and even down into San Antonio now as we grow. This has allowed the company to actually receive deals off market, backdoor deals that are not presented to anybody else. Meaning Lynn gets first look, right? And with first look, you get the ability to tie a deal down and move to stage 2, which is to structure an opportunity that actually makes sense for you, meaning you have bargaining power. So once we go in and we assess the risk, in fact, we were just talking about a deal just before the thing started. We're just talking about the risk associated with the deal and how to approach it. We can structure opportunities where if a partner or a sponsor needs money, capital from us, or needs support, we can come in and say, yes, we can provide that support, but it's going to come in as debt, we're going to come in as preferred equity, or we really see the upside, sure, we'll write you an equity check, right? Or maybe there's some other situation where there's some capital liquidity constraint need, and we say, fine, let's just take the project off your hands. So we have all these different ways of capturing opportunities and putting ourselves in a risk-adjusted position where we feel we're very comfortable making that investment. Not typical, right? Typically, a marketed deal is brought to you and they tell you, here's what you need, and you compete with 5 other people, and you give us the best terms or we're done, right? Now, in addition to structuring the opportunity, we also get to enhance the terms, right? Because now we are unique. We are the only single person solving this other sponsor or partner's problem. So we get to come in and protect our downside. We get to create certainty scenarios. We get to ensure that our capital is returned first in the stack versus other folks. We get to participate, obviously, in the profit upside, right, through waterfall and structuring. But also, we get to lock in future participation rights. Because we're invested in land with multi-phases and multi-stage growth, we get to then lock in future growth and decide, okay, if we like this ticket, we're going to keep playing this ticket, right? And keep growing it, especially in great locations and corridors, which we'll get to. So there's a lot of those opportunities. Now, most important for everybody in the room is the special Real International perks. I have never seen this outside of Real International, except at the institutional JV level, but it's never been presented at this level, where you get to actually, the investor itself not only participates, gets to buy into a deal, like a private equity deal, but also gets first option rights to get the real asset on the back end. Meaning if we do a condo development deal, you get the right not only to invest in the condo deal during its construction phase, but also get a right to buy the units at a predetermined price or to buy shares at or some component of, let's just say, you get to take a commercial warehouse with you on the way out. Very interesting way. It's absolutely a very dynamic and unique way of investing. So that's the real edge we believe we have in the market. Now, this leads into, this conversation again is about you and about long-term creation of wealth. So what we want to talk about here is big themes that we are targeting, themes that expand our horizon and go 20, 25, 30 years into the future. So the biggest theme that we'd like to talk about is the creation of the ASA super region, Austin-San Antonio super region. It's been happening. It's an 80-mile stretch connecting Austin and San Antonio through I-35. We'll see it on the maps, but that's the big theme that we're targeting over the next few years, really next 2 decades, to spur the growth of our investors' wealth in our investors' portfolios. Now, in addition to that, we're at the beginning of a new economic cycle marked by distress, which means Lynn gets a lot of phone calls, and we get a lot of opportunities to look at a lot of great deals for you. In addition to that, you will see a lot about infrastructure spending, human capital, innovation. I'll just jump right into it because it's really good stuff. Okay, so the first one, again, the Austin-San Antonio corridor, projected to be 8 million in population by 2050. We will outrank Dallas, Fort Worth, and Houston by 2050 if the projections actually cut through exactly. And this is not pie in the sky thinking, actually. The Austin Transportation Partners, so the Capital Area Metro Planning Organization, the Alamo area, which is Alamo is in San Antonio, Area Metropolitan Planning Organization are already working on these 40-year plans, the GLUPs, General Land Use Plans, to connect these 2 cities. And billions of dollars of infrastructure is coming, spending is coming. We'll walk you through that as well. Second theme, again, the distress marked by office, retail, super regional. We were just talking about super regional retail dying. There's a lot of potential distress out there coming on the left-hand side, and on the right-hand side, this is actually just a there's a lot of impending loan maturities really over the next 5 years, 24 through 2027. So these loan maturities will mark seller distress again and give us opportunities yet again to find ways to solve other people's problems and insert ourselves in different parts of the capital stack that will create opportunities for this room. Right? The infrastructure spending we just talked about on the left-hand side, that's the public infrastructure spending into the private sector. Samsung has received another $6.4 billion in the CHIPS award again, I think it was this week or last week. That brings us up to, I think, 25 or 28 billion in awards so far. Samsung's committed to spend $40 billion on their chip fab plans. The cool thing about Samsung right now is they're going to 2 nanometer architecture to compete with TSMC. 2 nanometer architecture is actually AI architecture. So this is all about AI chips. Austin's getting AI chips, right? On the right-hand side, you see public infrastructure spending. We'll start with the middle. That's the Austin-San Antonio corridor through I-35. Red means way too much congestion. TxDOT understands that. They're pumping in $10 billion to improve I-35 between Austin and San Antonio in those 2 pockets. Right-hand side, Austin alone, this is the cap and stitch project downtown, is budgeted at $4.5 billion of infrastructure spending. Actually, it's already up to $6 billion now, but who's counting, right? It's government dollars. Next one is cutting-edge human capital. This is something very unique. We pulled some data from Talent Map about artificial intelligence jobs and artificial intelligence talent. Turns out Austin, Texas is already ranked the number 4th state in the country, behind California, Washington, and New York. And in Texas, Austin is the leading city for artificial intelligence. We're already there. And then you couple that with Samsung doing AI chips. Hey, what could go wrong? Last one, the SH 130 Smart Freight Corridor. So California has been the hub of all of this autonomous and intelligent transportation services and all of that. What's very interesting is SH 130, which is on the east side of Austin, the highway, right, and it parallels I-35, is the recipient of the country's first automated trucking corridor technology. So we're actually going to be the first in the whole country. Not San Francisco, not California, right? Right here, East Austin. First one in the country. So we're going to have autonomous trucks going up and down on this arterial I-35. So basically, Milken Institute, one of the global think tanks, they produce really good data. Yet again, 2024's market report, they list, again, Austin as the #1 ranking country in the United States, #1 for job growth over the last 5 years, #1 for wage growth over the last 5 years. But interesting statistic at the bottom, over 60% high-tech GDP growth in the last 5 years. Think about that. 60% GDP growth in the high-tech sector. It really shows you there's something special going on here in Austin, right? So how does this all kind of come down now to the strategy, right? We talked about, obviously, it starts with you, the investor, and your long-term goals and needs, right? Both for wealth creation, accumulation, protection, transferring over from generation to generation. So our approach is to, we'll start over here maybe on the corner, is to start with a long-term view, right? It's about the big picture. It's about your big picture. How do we support that? That's the #1 thing. Then we have to have a clear defined strategy for the next 2 decades. As we grow this company, our targets are multi-billion-dollar company, but that's not covered here today. But in order to get to where we want to take you as investors and partners, we have to capitalize on one clear trend that is actually occurring right beneath our feet, which is the ASA super region trend. Then we're also focused on path of progress growth, which means while the growth is occurring between Austin and San Antonio, there's specific corridors where this is happening more so than others. And we'll get into the data and I'll show you. We have some really cool visuals to show you where the growth is really occurring. So we are path of progress positioning focused as a company. We want to be on those corridors. So in addition to that, I've already discussed sort of this risk-adjusted structuring, that 4-layer pyramid, right? Those types of things. And our goal is to remain a problem solver, right? At the end of the day, people come to us with good deals because we solve their problems. Cash quickly, really good terms, structuring, right? Time, money, all of that. We understand how to solve people's problems on the market side, which then helps us create great opportunities for our investors. All right, so let's move on to the strategy. So let's see. So this is geographically where we're headed. We're going to cover some markets in Austin. So we'll start with Round Rock, Georgetown, Hutto, Round Rock, Taylor. Go to the east side. So we have Leander, Cedar Park, Pflugerville, Manor, down to Elgin, the Kyle. That's I-35. And then we head out to Bastrop real quick. Then we come back through 130 and 35. We come down to San Marcos, out to Lockhart. And then we continue down I-35, right, to New Braunfels, right, to Seguin, then Selma, then we have Cibolo, and the greater North San Antonio market. So this right here forms the corridor. Now we talk about the corridors of growth, the submarkets of growth over the next decade. 2 decades, a couple. Now here's some interesting data. When we look at forming a strategy for the long run, it's really important to see where are other people making significant investments as well, right? So now the following maps are actually going to see where many, many billions, if not tens of billions of dollars have been pumped in by institutions, pension funds, individual investors, developer, even local owner-operators and developers. Where is the money been going? So what we've done is we've taken a snapshot from 2005 to 2024. We're using CoStar data here. By going back just before the financial crisis, you'll see a frenzy and then you'll see it die out. In every video, you'll see it die out a little bit between 09 to 2012. And then we kind of ramp back up. And now that's where over the last 15 years, let's see where the money's been pumped, right? So we're going to start with multifamily first. So here's a chart. We're in 05, 06, 07, frenzy, 08, 9, market dies down. Let's see where the growth has occurred. And I think are highlighting, right? So you'll see downtown Austin, you'll see along I-35, then Cedar Park, Leander, pick up, and then you'll see as we get to the last 5 years or so, SH-130, east side of Austin, on fire, right? Too busy, exactly. So here's just a freeze of that map. So basically what you're seeing is over the last sort of 15 years, you can see the major corridors where this is probably $5 to $10 billion of multifamily development have occurred, right? This is where people are making real bets, right? Placing real money to figure out where to invest in Austin. Okay, next one's retail. Okay, so retail is very corridor specific. So you'll see in the retail, you've got the I-35 corridor, and then you've kind of got that 183 Leander Cedar Park corridor, and then you've got the I-35 corridor all the way up to Georgetown, and then you see this diagonal corridor is actually the I-45 corridor, SH-45 corridor, out to Hutto and Taylor. Now, obviously, this data stops at 2023, so you don't see Taylor yet, but over the next 5 to 10 years with Samsung pumping in $40 billion with a new, I can't remember the name of the project, but it's like several million square feet of industrial is actually coming up somewhere here between Hutto and Taylor, right there. You're going to see a tremendous amount of retail development as well. From what I've been told is investors, every restaurant along that corridor between Hutto and Taylor is perpetually occupied by developers right now. So if you go for lunch, you meet a bunch of developers if you want to know where they're at. Okay, industrial, let's look at that map. Industrial has historically been right up here near the domain, east side domain metric, and down here near Del Valle. But in the last decade or so, you'll see the tremendous amount of growth on the I-35 corridor. Again, 183, Leander Cedar Park, and again now heading out Hutto, Taylor, similar things. Hopefully by now this is the third asset class we've covered. Hopefully you're starting to see a trend as to where are people placing their bets in Austin, right? So just taking it as a freeze frame map, you can kind of see that corridor all along I-35 and then some of those additional corridors. Now that we've only covered Austin, there's just too much data to share, but just to summarize effectively, between Austin and San Antonio, you can see a very clear path as to which markets people are actually making real investments in, where is development occurring, and growth, all of this growth brings value, right? So this is where we get to increase our value and our wealth. All right, so again, now on an individual investment, we can take a piece of dirt. We, as Real International, can do entitlements, value adding at that level, site planning, and then as we start to move, we get into the horizontal, right, where we do the land cut and fill all of that, bring the utilities in, create the pads, make it ready, sell it to a builder or whatever, or participate on the vertical. We get to choose because we get in so early in the process. We get to choose where we want to play, what part of the capital stack we want to play, where in the development stack we want to play, and investing across time. What phase of an investment do we want to make an investment in? So all of this is really for your benefit at the end of the day, because we get to manage the risk at every single step and present only the deals that we really believe in to our investors. Make sense? Yeah? So that's the idea here.